This is Eric Mothers, Mother.com, for weekend market analysis for the weekend of June 22nd and June 23rd, 2019. I didn't think I was going to get time to do this video, but let's get on it here. I did find some space, so let's make it. And let's begin with the S&P 500, and we begin with the 2-year weekly here. We can see as of the close of yesterday, this is a fresh all-time weekly closing high. So this is very simple in terms of how to track this in terms of strength. The S&P 500 would now need to defend 2945 0.64, which is going back to this close here from, I believe, April of this year. So if it can hold above that, then that's very strong, and we can anticipate the market to have some traction to the upside. And of course, we know that a failed breakout would invite some questions into the market. A couple of observations after saying that. So again, so the main takeaway here is we would need to hold above this level if this market is to continue higher. One thing that we do see here is the way the market closed. If you're looking for a reason to suspect that this might not work out, is there's a line here to consider, the RSI topside. Just one view here. Of course, if the market is to go higher, the RSI needs to move above that level. Resistance around current levels here would suggest that the next meaningful direction is going to be for a pullback. All right, now if we take a look, and we can also see that, let's take a look at the Dow. Now, unlike the S&P 500, the Dow had a different close relative to the prior highs, and I'm going to go back to this breakout here from 2018. So this is January 2018, the closing high right there. And the reason why I'm using that high is because if you take that high and just draw a line around current levels like that, you get an understanding of how the market has responded when it has come to this level. In terms of material breakout here, we had a 1 week where we did break out and stay above that 2018 January monthly closing high, but ultimately, as we can see here, that was the only close above that level, and then followed by that was a failed breakout attempt on a couple of weeks there. Ultimately, we did drop after that. We come again here, we try on a couple of occasions here for 3 weeks or so. We were trying to hold and trade above that prior closing high. Should give you that number. It's 26616.13, going back to this close. And again, we can see that there was a couple of failed breakout attempts here in April of this year. Ultimately, we failed to hold that level, and we see this pullback. So here we are, and the Dow is above that level. So again, we can see that a little bit of a different feel, but if this is gonna be where we see the market really take off, it does need to hold above this level. That's one way of looking at it in terms of keeping it simple. And then failure to hold this level, if the Dow was to break back below that level on a weekly chart, that would also be a sign again. It's just like we had question marks after this failed breakout before the drop, failed a question mark here because of the failed breakout, and then we got this drop. What happens around here should determine the next meaningful direction. Either we continue higher above that level, or we stall and we see this market start pulling back. Similar to that of the S&P 500 on the weekly, we can see that the Dow also has a line we can draw based on RSI topside. Should be something like that. So this is where we need to see strength on the RSI, with the market moving above that level. Resistance around current levels, of course, would suggest that this line is coming in play and that the market is stopping its current move to the upside right now. And we can see something similar. Maybe I won't spend as much time on the NASDAQ, but let's just take a look at it briefly here. And the NASDAQ, unlike the other markets that we've discussed here, is not yet close to breaking out. Either you can use 2018's weekly closing high, or you can use this weekly closing high. At any rate, the Nasdaq has yet to clear those levels. Now, if you're looking for a reason and reasons why this market could be stalling around current levels, if it is going to stall around current levels, of course, and I'm sure you've already kind of seen some of the charts, is this is where we broke down recently, so we're just going to draw a line from there. Should be something like that. I would draw it something like that. If we end up seeing confirmation of resistance here as we begin the new week, then of course this is the market telling us around here there's some resistance and we struggle around current levels. If the market is to go beyond current levels as far as the Nasdaq is concerned, of course we do have to take out and move above the recent, or where we are seeing a little bit of a resistance as of Friday's close. So a breakout above this level is needed if the market is to move substantially above this current range. Now of course we can see something similar here if we take a look at the S&P 500. A little bit of a different look, but something similar. By the way, I should mention here that the S&P 500, based on this close here from April of this year, on a daily basis, we can see that this is an attempt to break out on the daily, and so we should also track that level, and this is at 2945.83. So now that we did close above that level, then it is up to the market and the bulls to be able to sustain above this level. In other words, if we can hold and sustain above this level, that's bullish. Failure to hold that level, of course, does mean that the market is not in a mood for higher prices at the moment and would invite lower prices. That's a level to watch. S&P 500 needing to stay above the earlier all-time, or the prior all-time monthly closing high at 2945.83. Anything back below this price, of course, is not what the bulls want to see at all. Now, as of Friday, we can draw a line. I will draw it. Let's draw it. Actually, if we go back to a prior break, to be consistent with that line we saw with the daily chart for the Nasdaq, what we can do here is draw this line extension, something like that. And if we use that line, the uniformity line, we can see that early in May there was resistance here of those highs. We did get some type of a pullback after that, and here we are. It looks like maybe, just maybe, this is also coiling. If we end up seeing resistance back below the blue line, then we suspect that the next meaningful direction is lower. We can also see a hint that right now the RSI 69.1 might be rejected. Another way of saying that if the market is to go higher, we would need to stay above the blue line and above 69.1. We would also need to hold above this prior daily closing high. So those are the market challenges, and the same can also be said about the Dow. Now again, the Dow does have a little bit of a different take. You can take this daily closing high from the Dow from September of 2018 and draw a line right there, and this level is, and that is at 26828.39. And again, going back to this close as of September 2018. Now you'll notice that as of Friday's close, we did spend some time above this level. Got the high at 26907, but we did close below that level and down for the day. So for now, given the data we have, this is a failed breakout attempt. Now it doesn't mean that the market cannot try again. So in other words, if the bulls are to clear this level, of course they need to take out this price. The way we closed Friday, now we start looking at the possibility that this is a flag. if this continues to be the case where we have a failed breakout. Also, we see signs again, just like we saw with the S&P 500, of a potential RSI 69.1 rejection. It will be similar visually to, let's say, this period here where we have RSI 69.1 rejection of the all-time closing highs, rejection here of this short-term highs. So if we see rejection here again, that might be a sign of a market that is due for a pullback. Also, we can draw a line as such, and what this line gives us is connects to the recent lows here and here. We break below there, turns into resistance immediately thereafter, and we did pull back. And here we are again. We hit that as of Thursday, and by the close of Friday, late Friday, trading maybe in the last couple of minutes, we did close down, and that is showing resistance. So there's some other things one can look for guidance as we go into the new week. In other words, we would need to see a breakout if this market is to go higher. Otherwise, continuation of resistance would suggest that continuation of resistance and a failed breakout would suggest that the next meaningful direction could actually be lower. By the way, this daily look that I'm discussing here can be seen in a couple of other places. In fact, if you look at many of the charts as of this weekend, for example, take a look at the Canadian market daily. Oops, let me get that right. We can see something similar on the daily. So here we got that recent break, and I'll go through this quickly. So as of Friday, that does look like it is giving us an indication of where things are lining up. As long as that continues to be the case, we can see a variation of this. If we take a look at the Dow Transports, again as an example, lots of the charts are going to have the similar look and feel. Here we can see again another variation of the same daily chart showing some type of a resistance there. So if the market is to go higher, you can see that we do need to see evidence of this by moving above current resistance lines on the daily. The IWM, again right there. Also, we can see the EEM, emerging market ETF. Just draw a line like that. You can see where there's a question mark as to whether it is going to clear the RSI level here based on the red line, potential resistance area. We can see another variation of this if we take a look at the VT, the Vanguard Total World Stock ETF. That's a mouthful. We can draw this maybe with a backtest line, something like that. And again, just asking questions as to where this market is more than likely to go next. Of course, it can always clear that red line, but right now we closed with that potential for resistance. Of course, as we've seen with other markets, the other main takeaway is whether we can hold above prior highs. In other words, are we able to sustain above the prior daily closing highs? Take a look also at, let's see here, the European Market Tracking ETF, EFA. And again, we can draw another backtest line as such with the same, pretty much same type of analysis. We need to clear this red line, otherwise this becomes an area of consideration for a pullback. And again, if you take a look at the recent highs here, this is still within potential, either going to break out or going to fail to hold the breakout. So lots of questions being asked of the market as of Friday's close. ACWX, which is ETF that tracks world markets, X the United States, so United States is not included here. And again, I'll just draw a single straight line, something like that. You can see also the price. We need to clear these levels, otherwise looks like this could be the beginning signs of a failed short-term breakout, indicating potential for prices moving lower. Take a look at gold for sure. This is a powerful breakout if you take prior monthly closing highs. In fact, if you go back to the highs here, in fact, let's take a look at a longer view. Go back a little bit further than that. So this is GLD. We can use this closing high from 2016. The level there is 128.98. So it would need to hold above this level and sustain that level. Otherwise, the last thing bulls want to see here is a failed breakout, bringing it back below that level. So my only problem here with the GLD and GDX, both of them are in the same, pretty much the same look. The price breakout is perfect. There's nothing wrong with the price breakout. This is very desirable. It's exactly what the bulls wanted to see here. A nice price breakout. The RSI looks good. RSI is perfect at 3-year highs. The problem we're having here is a little bit of a lagging situation with the MACDs. And so, I'm not as confident as one would be. It's just not quite there, but, close enough, maybe. At the very least, it's worth watching. But this is, it's not too far off. But I would say the MACDs are a little bit lagging behind, just slightly. But the RSI is good. So if one was waiting for gold to move, then this is where you take action. Definitely. You take action right now just based on the fact that it is breaking out in price. RSI is good. And same thing with the GDX. Which is also definitely breaking out. You can take that closing high. RSI is good. Close to 3-year highs, I'll take that. It's the MACDs where we are seeing a little bit of a problem now, because we don't have a quality confirmed move to 3-year highs of the RSI of the MACDs, because the MACDs are leaving us questioning the quality of this breakout. It will not surprise me that ultimately this move in gold fails. One of the reasons is, if you go back to the GLD, take a look at a longer monthly chart for GLD. We can see that the GLD has been struggling around this level here. If I draw that line like that. So this is pretty much now I'll say this, if you are waiting for gold to give you a signal, it did give a signal over the last 2 weeks. So this breakout here in price is the signal you need, but it will need to hold above 128.98. It needs to hold above 128.98 if this is going to be a true change in momentum to the upside. The MACDs will take care of itself, especially if price can pick up momentum during this monthly breakout attempt. And of course, the last thing the bulls want to see here is a failed monthly breakout above this price.